You're watching Silver News Daily. Subscribe for more. Imagine a world where silver prices skyrocket to $805 per ounce, transforming your investments overnight. It's not just a wild fantasy, it's a very real possibility. Recent revelations have exposed a startling truth. The silver exchanges are selling silver they don't actually possess. This impending shortage could create an unprecedented market squeeze, catapulting prices to unimaginable heights. In this video, we'll dive into the shocking details and uncover how market manipulation and soaring demand could make this explosive price surge a reality. Keep watching to understand why now might be the perfect time to reconsider your investments. As silver prices surged to $30.60 amid growing speculation of Federal Reserve rate cuts, the market dynamics are rapidly shifting. The easing strength in the U.S. labor market has led investors to believe that rate cuts are imminent, driving down U.S. bond yields and making silver, a non-yielding asset, more attractive. But this price movement is just the beginning. The CME FedWatch tool shows a significant increase in the probability of a rate cut in September, rising from 47% to 68% in just a week. This shift is heavily impacting the bond market, with 10-year U.S. Treasury yields dropping sharply from a high of 4.64% to near 4.29%. As the opportunity cost of holding silver diminishes, more investors are flocking to the precious metal, pushing its price higher. Adding to this momentum, weak U.S. labor market data, such as the disappointing JOLTS job openings for April and lower than expected ADP employment change for May, has further fueled the rate cut speculation. The U.S. dollar index has also taken a hit, struggling to recover above 104.40 and falling to immediate support at 104.00. These economic indicators suggest a growing belief among investors that the Federal Reserve will soon pivot towards a more accommodative monetary policy. This environment creates a perfect storm for silver prices, setting the stage for a potential rally far beyond current levels. With the U.S. non-farm payrolls report for May on the horizon, all eyes are on the data that could cement this trend and accelerate silver's ascent. As silver continues its upward trend, technical analysis reveals crucial insights into the market's future. Currently trading at $30.60, silver is navigating a rising channel chart formation, where each pullback is seen as a buying opportunity by savvy investors. The advancing 50 and 200-day exponential moving averages, EMAs, around $28.63 and $25.46, respectively, underscore a robust bullish trend. Despite the relative strength index, RSI, pulling back into the 40.00 to 60.00 range, suggesting a temporary fade in upside momentum, the overall bias remains strongly positive. Key resistance levels are being closely monitored, with the $32.50 level acting as a major barrier that, once breached, could trigger a significant price rally. The interplay between technical factors and market sentiment is critical here. Investors are not just watching the price movements, but are also keenly attuned to broader economic signals. For instance, a potential rate cut by the Federal Reserve could lower the opportunity cost of holding non-yielding assets like silver, making it even more attractive. Moreover, silver's role as both a precious metal and an industrial commodity adds layers of complexity to its price dynamics. Questions about the upcoming jobs number and its impact on the U.S. dollar are significant, as silver often moves inversely to the dollar's strength. Short-term pullbacks in the silver market continue to attract buyers, indicating strong underlying demand. This persistent buying pressure suggests that the current uptrend is not just a fleeting phase, but part of a more sustained movement. Investors are advised to keep their position sizes reasonable due to silver's inherent volatility, but the outlook remains decidedly bullish. With these technical indicators in place and a supportive macroeconomic environment, silver appears poised for continued gains. This technical landscape sets the stage for a deeper dive into the factors driving industrial demand and the impending supply shortage that could propulse silver prices to unprecedented levels. Industrial demand for silver is soaring, creating a perfect storm for an impending supply shortage. This surge is largely driven by the green energy revolution, with solar energy playing a pivotal role. Silver's unique properties make it indispensable in the production of solar panels, which are crucial for harnessing solar power. As the world intensifies its efforts to combat climate change, the demand for solar panels, and thus for silver, continues to rise dramatically. In addition to solar energy, the burgeoning fields of artificial intelligence, AI, and electric vehicles, EVs, are also driving silver demand. AI technologies rely heavily on high-performance computing, which requires significant amounts of silver. Similarly, the EV industry uses silver in various components, including batteries and electrical connections, to ensure efficiency and reliability. According to the recently released World Silver Survey, 2024 marks the 5th consecutive year of a silver shortage, with this year being one of the most severe on record. In 2023, silver demand outstripped supply, resulting in a structural market deficit of over 142 million ounces. The forecast for 2024 indicates that the shortfall will nearly double to 265 million ounces due to surging industrial demand. Historically, the demand for silver has been evenly split between industrial uses and investment. However, this balance has shifted significantly in recent years, with industrial demand now accounting for 64% of total global silver demand, a remarkable 19% increase from just a year ago. This trend shows no signs of slowing down, as advancements in technology and renewable energy continue to accelerate. The catalysts behind this historic squeeze in silver supply are numerous. The green energy transition, driven by global efforts to reduce carbon emissions, is a major factor. Solar energy installations are expected to grow exponentially in the coming years, and silver's role in this sector is irreplaceable. Alongside solar energy, the expansion of AI and the EV sectors, two of the fastest-growing industries globally, further exacerbates the supply-demand imbalance. As these supply and demand dynamics intensify, silver prices have embarked on a parabolic run. Since October last year, silver prices have rallied from just under $20 an ounce to a 12-year high of $32.50 an ounce in May, marking an impressive gain of over 62% in just 7 months. Now, with silver's stealth bull run capturing global attention, the stage is set for even more dramatic price movements. The last time silver prices broke above $32 an ounce, the precious metal surged to $50 an ounce within 100 days. If history is any indicator, we could be on the brink of a similar, if not more spectacular, rally. The combination of skyrocketing industrial demand and a severe supply shortage creates a scenario where silver prices could reach unprecedented heights, potentially hitting the $805 mark as the market adjusts to these new realities. The silver market is not just experiencing a natural rise in demand, it's also being heavily manipulated by major financial institutions, creating a precarious and potentially explosive situation. The concept of naked short selling, where entities sell silver contracts without actually owning the metal, has become a major factor in this market. Recently, it has come to light that several major bullion banks, including Deutsche Bank, HSBC, JP Morgan, and Standard Chartered, have been engaging in massive naked short positions. These banks have been selling silver they don't actually possess, effectively betting on a price decline. However, as demand for physical silver continues to rise and available supplies dwindle, these short positions become increasingly risky. In a revealing move, these banks have been making desperate trips to the Shanghai Metals Exchange, seeking to cover their short positions. This unusual activity underscores the severity of the situation. Over the past few months, the Shanghai silver stocks have plummeted to their lowest levels since 2020, suggesting that these banks are scrambling to source the silver they've sold but don't have. The implications of this market manipulation are profound. As these banks face mounting losses, they may be forced to cover their short positions by buying silver at any price, potentially triggering a massive price spike. This situation is exacerbated by the fact that the global silver inventories are at critically low levels. For example, the London Bullion Market Association, LBMA, and the COMEX, Commodity Exchange, both report significantly depleted silver inventories, with COMEX showing only about 40 million ounces available for immediate delivery. The stakes are incredibly high. If these banks are unable to cover their positions, the entire market could face a dramatic squeeze. Historically, such squeezes have led to rapid and substantial price increases. For instance, the Hunt brothers' attempt to corner the silver market in the late 1970s led to a dramatic surge in prices, peaking at nearly $50 per ounce in 1980. In the current context, the dynamics are even more complex. The increasing industrial demand, coupled with significant investment demand, puts additional pressure on these financial institutions. Moreover, the regulatory landscape has evolved, making it more challenging for banks to manipulate markets without facing significant consequences. This scenario sets the stage for a potential silver price explosion. As the market recognizes the precarious position of these naked short sellers, investor confidence in the paper silver market could wane, driving more demand towards physical silver. This shift could further deplete available inventories and amplify the price surge. The possibility of a dramatic short squeeze in the silver market highlights the importance of understanding the underlying mechanics and risks involved. For investors, this means staying informed and being prepared for significant volatility. As the situation unfolds, the next few months could prove to be some of the most pivotal in the history of the silver market, potentially pushing prices towards the unprecedented $805 mark. To fully grasp the potential of silver's dramatic price surge, it's crucial to consider its historical performance and future predictions. Historically, silver has exhibited remarkable price spikes during periods of economic uncertainty and heightened demand. The last major rally in silver prices occurred in the late 1970s and early 1980s, culminating in a peak of nearly $50 per ounce in 1980. During that time, market manipulation and a squeeze on available supply played significant roles, similar to the current situation. The silver market today shows several parallels to that period, but on a potentially more explosive scale. Over the past several months, silver has rallied from under $20 an ounce to a recent high of $32.50. This impressive gain of over 62% highlights the metal's bullish trajectory, driven by both industrial and investment demand. Key analysts and market observers are now predicting that we might be on the verge of another historic breakout. The supply-demand dynamics are more pronounced today, with a marked increase in industrial usage and significant supply deficits. As industrial applications in green energy, AI, and EVs continue to expand, the pressure on silver supplies will only intensify. Moreover, the geopolitical landscape and monetary policies further support this outlook. As mentioned earlier, the Federal Reserve's potential rate cuts and the global shift away from the US dollar in commodity trading are crucial factors. These economic shifts reduce the opportunity cost of holding silver, making it an increasingly attractive asset. The last time silver prices broke above $32 an ounce, they soared to $50 within 100 days. If we apply this historical pattern to the current market conditions, silver could be poised for a similar, if not more dramatic, rally. Analysts suggest that this time, the price movement could be even more pronounced due to the unique combination of factors at play: unprecedented industrial demand, significant supply shortages, and extensive market manipulation by major financial institutions. Another critical element to consider is the potential behavior of retail investors. With growing awareness of market manipulation and the advantages of holding physical silver, more investors are likely to move away from paper silver products and towards physical silver. This shift could further deplete available inventories and drive prices higher. Additionally, the evolving regulatory landscape and increased scrutiny on market practices may limit the ability of institutions to continue their manipulative activities. As these regulatory changes take effect, the artificial suppression of silver prices may diminish, allowing the metal's true value to emerge. In conclusion, the combination of soaring industrial demand, significant supply shortages, historical price patterns, and regulatory changes sets the stage for an unprecedented rally in silver prices. If the current trends continue and the market dynamics play out as expected, we could see silver prices reach the staggering level of $805 per ounce. This potential for explosive growth makes now a critical time for investors to reconsider their positions in the silver market and prepare for what could be a once-in-a-lifetime opportunity. All these factors culminate in an environment ripe for a massive price surge in silver, potentially reaching the remarkable target of $805 per ounce. This potential spike is grounded in a complex interplay of market dynamics, historical trends, and unprecedented industrial demand. To bring this all into focus, let's recap the core reasons why silver prices are set to skyrocket. First, the ongoing and intensifying silver shortage is critical. The consistent demand from the green energy sector, particularly solar power, and emerging technologies like AI and electric vehicles, continues to outpace supply. With the silver deficit expected to nearly double this year, this imbalance creates a foundation for substantial price increases. Second, the market manipulation by major financial institutions through naked short selling has reached unsustainable levels. These institutions have been artificially suppressing silver prices by selling silver they don't own, but now face the reality of having to cover these positions amidst depleting inventories. Their desperate attempts to secure physical silver from markets like the Shanghai Metals Exchange highlight the severity of their situation. This short squeeze could force them to buy silver at any price, driving prices higher rapidly. Third, historical context supports the potential for dramatic price movements. Past instances of significant silver price hikes, such as the surge to $50 per ounce in 1980 and the rapid increase in recent months, indicate that the market is capable of sharp and substantial upward moves. The current economic and geopolitical conditions mirror those past scenarios, but with even more pronounced factors at play, suggesting an even greater potential for price escalation. Lastly, the shifting macroeconomic environment, including the Federal Reserve's potential rate cuts and the global move away from the US dollar for commodity trading, further bolsters the case for silver. Lower interest rates make non-yielding assets like silver more attractive, while the de-dollarization trend increases demand for precious metals as alternative stores of value. Considering all these factors, the stage is set for silver to reach unprecedented heights. The $805 per ounce target, while seemingly ambitious, is grounded in a solid understanding of market dynamics, historical trends, and current economic conditions. This potential price explosion underscores the importance of silver in the current financial landscape. For investors, this represents a unique opportunity. The combination of market manipulation, soaring industrial demand, and significant supply shortages creates a scenario where silver prices could experience explosive growth. This is a once-in-a-generation chance to capitalize on the evolving market conditions. In conclusion, the impending silver shortage, driven by unparalleled industrial demand and exacerbated by market manipulation, is poised to send silver prices skyrocketing. As these dynamics unfold, the potential for silver to reach $805 per ounce becomes increasingly plausible. Now is the time to pay close attention to the silver market, as the next few months could witness one of the most significant price movements in history. Don't miss out on this extraordinary opportunity. Subscribe to our channel for ongoing insights and stay informed about the latest developments in the silver market. Remember, this analysis is for informational purposes only and should not be considered financial advice.